All right, guys, this video is going to be for my bond traders. We have our bond edge class tomorrow. Pablo and I are going to present our favorite trade in the yield curve. Pablo just had a great post in our futures coaching room. So here we go. TnFly is driving the bus. So what I'm going to do with this post is I'm going to break down each section. So let's start from the beginning. Notice the reaction we see in all these other spreads when the TnFly finally starts to move a bit lower. The BUB, NCB, and TN. Pablo shared a chart. I'm going to replicate that exact same chart for you. So here we go. Here's the exact same chart. So let me hit the beaker here. I have bond edge open. The bottom one is for spreads. The top is just for outrights. So I'm going to go into spreads. This is bond edge. Notice the reaction we see in all these other spreads when the TnFly, so TnFly will take me right down here. And then we're going to look at the BUB, NCB, and the NTN. NCB, we're going to keep. NTN. Let's go here. You can see this is ZN against TN. And then here, this is TN against ZB. And then the BUB. And I'm going to take off everything else besides this specific line because I want everyone to understand. Okay, apply, okay. What a great chart. Okay, so again, TnFly is going to be right here. TnFly is going to be this silver. What Pablo is talking about is if we just use this week, TnFly got smoked today, got killed. Notice the reaction of all these other spreads. So the TnFly is selling off, and these individual spreads are all rallying. So overall, when we see this, guys, think about the relative strength of the ZB contract. As that weakens, what's going on is the spreads are rallying. So the back end of the yield curve is really steepening. Now let's look at the next part. The TnFly. Now the TN is going to be a 10-year and the ZB is going to be an 18-year. Even though the ZB is a 30-year future, it's still an 18-year bond. So between the TN and the ZB, there's 8 years. So the TnFly barely moved. So let's only look at that, and then at the end we'll put everything on together. So TnFly, and then we look at the two components of the TnFly. That's going to be the NCB, TN versus ZB, and then we need ZN versus TN. Bub, we don't need you right now. We'll come back for you. Don't you worry. Let's make sure that nobody else is coming to our party. Here's the TN, guys. The TnFly barely budged. Really didn't move very much. But the spreads, what makes up the TnFly is the TN, and we're looking at the relative difference against the 10s to the 10-year future, which is really a 7-year. 30-year future, it's closer to an 18. So we're looking one of these here, and then one of these against here. Still need to do these in the proper ratios. That's something that you need to learn. ZN-TN, TN-ZB. So these are components of the TnFly. Look, this thing didn't move, but sure as heck these things moved. Then Pablo says, check out the null. Check out the fob. let's just add those directly on here. Those are going to be more curve. And when I say it's more curve, if we go here, 5-year future contract, which is really a 4-year. ZB, we talked about that, that's an 18-year. This is 14 years of difference. The more difference you have, the more volatility you're going to have. So the FOB, and then Pablo says the null is going to be ZN versus UB. Okay, apply, okay. And what we're doing here is we're looking at the null and we're looking at the FOB. Remember, that FOB's got 14 years of curve. So it's going to be riskier, it's going to be more volatile. So if we look at the entire curve, the entire yield curve, not the entire, but 4-year to 18-year, straight up, very, very steep. Then Pablo poses a question for all of you. Would you have expected that to happen? And what he's saying is if we go back and put the bond fly back on the chart, again, it's the silver right here. Would you have expected that to happen? What he's referencing is, would you have expected the ZB fly, the ZB against the ZN, the ZB against the UB, looking at ZB relative value, would you have expected when it sold off that the entire yield curve would gap higher? I am posting the bond spreads chart using weekly cycles and 10-minute aggregation. Looking at the data this way makes me see the inverse relationship between them. That's the chart we just went over. Using the chart I normally use with yearly cycles, yes, cycle type, year. There are other durations here. Year, okay. Apply, okay. And so here we go. Remember, this one's on a cycle for a year, so the data starts in the beginning and the first of the year. We can go back to last year. That's what it looks like last year. Let me put on some more data. So now that we have more data, this is all of 2019. The ZB fly is going to be this gray. Let me take off this green fight. Going back in 2019, we have the entire year up. And I guess at the end of the year, the ZB fly, as it did sell off, the FOB was rallying. But Pablo makes an excellent point here. Using the chart I normally use with yearly cycles and an hourly aggregation. So yeah, it's tougher to spot on this longer term chart. Here's the ZB fly here. And this is where you guys can see the ZB fly really got extended relative to the rest of the yield curve. Pablo looks at this as a longer term chart, but when he gets curious, and how we teach is that's when we want you to drill down back to that 10-minute, back to that weekly, and then looking at the relationships, using common sense, making good decisions. Pablo, great post. I'm excited for class tomorrow. Jonathan Rose, owner, Masters in Trading.